We have been dragged down a path which is frightening and has become impossible to turn back from. The stock market has been basing its current value on the total amount of QE already in the system and the anticipation of how much will be added. We are long overdue for a massive correction in several frothy assets, and it's only a matter of time before that occurs. All nations will suffer as the middle class vanishes, poverty spreads through cities like a virus, and chaos erupts. You came here for the truth, so let me unveil that for you. Today we will discuss the 5 things that could lead to a global recession. This is from one of the articles, which I'll show you here first. And what they term is the perfect storm. So I'm suggesting that we have headed towards a perfect storm. I've said this before. The reasons that they go through, there's definitely variations of this, but essentially global growth, China, the stock markets, commodities markets, everything else, oil, and the US. So these are issues that they do discuss throughout the article. Highly recommended. If you have the time, check this one out of the Telegraph. It will be in the description as always. And I'll move into the article. There's so much, but I just want to cover this one part from it. A tipping point may well be approaching. According to these calculations, a 20% decline in stock markets that persists for more than 6 months will translate into a decline in consumption between 0.5% to 1%. I do believe that despite their numbers and their calculations, that we've already gone down so significantly before they're willing to admit the stock market crashing already. So these numbers are a little skewed. This would be a serious shock. My biggest fear is precisely that a dramatic shift in mood becomes self-fulfilling. And this is what usually happens. They talk about it further in this article, but essentially that there's a herd mentality. And what we have is an overreaction. This occurs with any asset, with any stock you look at. You can see it historically. It always goes too far, whether that's a bubble that just goes and grows, or whether that's a crash that goes down too far. But it ends up coming back to the median, always. And this is what we have to look out for. It could take 25 years to come back. It could take 1 year to come back, but usually it overreacts in either direction. And I love how they use the first domino to fall, because these dominoes are falling. I referenced this in terms of the different countries. Here they're using oil as that. For now, oil-induced financial stress is concentrated in the energy sector. With Brent set to languish around $30 to $35 a barrel for the rest of the year, prices will persist in the $40 to $60 break-even point that renders below the $40 to $60 break-even point. And basically what they're saying is these companies are not going to be profitable should it stay within that $30 to $35 per barrel. There's no telling why this can't go down even further from where it is, but they're saying $30 to $35 a barrel. I think there's going to be a lot of changes between now and the end of the year. So this 30 to 35 barrels would mean a very stable investment at this time, which I think it's going to be nothing of the sort. Like I said, lots more in the article, but I would really like to move on, or else we're going to have a 30-minute video on our hands. The signs that the second great internet investment bubble was nearing its end have been there for months, for those who know where to look. We saw what happened during the previous dot-com boom, where these corporations were getting so big, yet they had no underlying company. It was basically just a name, an idea. And we're entering that 2.0 moment right now, and in fact, in many ways has already declined. They included the decrease in funding rounds for the private startups valued at $1 billion or more, More tech startups, including Uber, having gone overseas to raise money at higher valuations, and prominent venture capitalists writing blog posts encouraging more private companies to go public sooner than later. There's more here before I get into my opinion. All of these suggested that the big US investors were beginning to turn up their noses at internet valuations because of the worst start of a year for technology stocks since the Great Recession. These more obscure data points have been confirmed by a more glaring one. And then it goes into talk about further things. What I want to discuss about this is that whenever the market chases something, generally it's something that you should avoid. When the oil was declining, when it was rising, you saw all that news media pop out and say every reason why you need to sell or why you need to buy. And that makes the markets go up to some degree. Of course, there's a lot of manipulation here, but at least it gets the sentiment for those who are involved some way. Maybe they just own mutual funds, or maybe they are a big time or mid-level investor. You have to realize that they're trying to push an agenda, and that's what happens. But as soon as you see an agenda, that's where you need to walk away from. This is something that's important to look at. In my book, I talked about PE ratios, and this is one way that you can look at stocks to determine whether they are overvalued or undervalued, knowing this the underlying thing here is that we have to remember that there is all this QE that's in the system. So take that and use it to your own advantage. This is what I wrote about in my book, talking about how during the dot-com boom, a lot of these companies had a PE ratio of 100. And historically, I've read numbers of either 15 or 16 being average. And that's literally since, I think it was 1871 or something like this. So you're looking at a historic average of 15 or 16, not over the last 20 years or something. This is, a couple hundred years that we're looking at. So remember that this is a very valuable thing to look at, but knowing that they print money in order to get them at this level to begin with. If you want to see how the PE ratio is and everything, go to my eCourse videos. And the eCourse, there's one there about the stock market and the PE ratios. Warren Buffett, everyone loves Warren Buffett because he eats ice cream and he drinks Coca-Cola. After 3 more days of buying, Warren Buffett's shopping spree is nearly $1 billion for the year. So they've basically purchased into oil, and what this shows is that Warren Buffett loves the future of oil. And I do personally believe, at least for the foreseeable future, oil is going to be worth something. There's no doubt about that. Oil is consumed in mass quantities every single day. Now, surely if there's a serious recession or depression, that need declines, but you cannot underestimate how important oil is at this time. There will be alternative energy sources into the future, that's for sure. But at this time, nothing even comes close. So remember, oil is important. But you're talking about Warren Buffett, an individual who gets insider deals. So don't be swayed by the propaganda that we see. The global economy seems trapped in a, quote, death spiral that could lead to further weakness in oil prices, recession, and serious equity bear market. That's according to Citi. Very important to understand this type of information, and they go into a lot of this here. I'm not going to cover everything, but what they said is that a stronger US dollar, weaker oil/commodity prices, weaker world trade petrodollar liquidity, weaker EM and global growth, and repeat ad infinitum, this would lead to the Oilmageddon, a significant and synchronized global recession and a proper modern day equity bear market. So what we're dealing with here is all of the issues that I've talked about. They like to put it here, and they get into things that I don't really like to discuss very often, but This is the information. This is what the market is showing us. So when we look at our pension funds, when we look at the pension funds of our family, this is what's important. Things are heading downward. What does that mean? They can either take bigger risks at this time and try to double their money, or they will suffer. And that's really what's happening at this time. The Bureau of Labor Statistics, the BLS, shows that there were 665,000 jobs lost in January before accounting for the seasonal adjustment. Oh, but look at that. You account for the seasonal adjustment and all of a sudden 151,000 jobs are created. This is the way that they do this. They manipulate it so much, and I just love reading the statistics that show you the truth. Yeah. They put out a number, 151,000 jobs created, and the people read that in the newspaper and they think things are good, jobs are being created. But then you take away the seasonal adjustment, which is a fraud in this case, that you see a significant amount of jobs were lost. And you're looking at this with all of the temporary work that is still being created, and still it looks terrible. Before I end the video, I want to show you two articles. New York to probe radioactive water leak at Indian Point. So you have yet another contamination into the groundwater. Radioactive tritium contaminated water leaked into the groundwater at this nuclear facility in Westchester County. Nothing's being done about this. This has happened countless times throughout history, and the people have to suffer. This is another one here. Hope and clean water remains elusive for the people of Flint. They have a very serious situation. Their water is polluted and is unusable at this time. What is being done? Well, not too much. This is basically an abandoned city, unfortunately, and these people are suffering as a result. This is the economy of this city, of this state, and then you look into the nation itself of the US, but look at the global economy. It's suffering, it's hemorrhaging, it's doing terrible right now, and nobody's out there to acknowledge it. That's all for this video here. If you found it informative, please give me a thumbs up. People want solutions, right? The number one thing to do is to protect your family. That's how you have to do this. And you don't protect your family once there's a situation, once there's a crisis or chaos. No, you prepare in advance. You know what to do. Many people on here are already getting prepared, and that's my message to you. Prepare in advance. If you found the video informative, you'll definitely find my book, The Money GPS, even more informative. You can actually flip through the book if you go over to Amazon. They have a look inside feature, which allows you to flip through the pages of the book to see if you like it. Take care.